Well, good to see everybody. If you're ready, I'm ready. And let's start going over the markets. Again, for any of you that are new to the FX Street webinars that I host, we apply the same strategy every time we do these sessions. We've been doing them pretty much twice a month. But again, from my experience working on the institution side of the business, specifically starting in the FX market, working on the bank side of the business, and understanding institutional order flow, we know that at the end of the day, it's all the movement of price is all about supply and demand, right? So we know that I think we all agree that prices turn at levels where supply and demand is out of balance, and then moves through price areas where you don't have a significant supply and demand imbalance. So our goal with these sessions is to identify those price points on a chart where you have these big supply-demand imbalances, where banks are clearly buying and banks are clearly selling. I've trained my eye to do that, to identify that for more than 20 years now, and based on a very simple set of rules, and that's what we do here during these sessions. So today will be more of an application session, not so much a lesson session. I want to try to get through a number of markets. I have a whole list of markets to go through here, but if you have markets that are not on the list and you want me to go over, that's totally fine too. So let's get started. Okay. So again, if you have markets you want to yeah, and I like that. Okay. In Q, perfect. Why don't we start with this silver market? I know we hardly ever look at that in these sessions. And remember, too, that the markets we look at don't have to be just FX markets. They can be. There's a lot of big misconceptions out there, and one of the biggest ones I see for people getting into this business is they think they need to be experts in the markets they're trading. Like, for example, I'm a Forex trader, so I need to be an expert on the Forex markets and all that. I would suggest changing that viewpoint just a little bit. What you should be an expert in before you put any of your money at risk in any market is identifying market turning points and market moves before they happen. Once you do, your job as a market speculator, whether it's a short-term trader or longer-term trader, is to look at an array of markets and find your best opportunities, meaning markets where prices are at levels where supply and demand is way out of balance, and then simply trading that market back to balance, taking your money out and putting it to work somewhere else where you have the same scenario. Okay? All right. Yeah, we can look at those. We can look at coffee and those markets as well. So when we look at silver, it's obviously had a huge move over the past couple months. And now it's obviously because you see how it's been shooting up over here on the weekly? Okay, now blow the weekly chart up. So there you can see it's been shooting up. So what do you do with that? Well, we now see on anything smaller than a weekly chart that this silver market has reached a price point where supply exceeds demand, where institutions, banks, the smart money are big willing sellers, specifically up here right around the 1730 to 40 area. Okay, it's the origin of this drop. We also see that institutions are buying, willing buyers of this market down here in the low 16s. So there's money to be made between, and I'll just kind of, I'll put these levels in. Some of these that we look at will be longer term stuff. Some will be shorter term. So I just want to identify this one right here. Okay. And whoops. There we go. Just this whole area up here. My lines are acting funny today, so All right, and then we would be looking for a move down to this level right here. Okay. Now, on any smaller time frame, if you look, for example, on this 5-minute chart, and I'm not suggesting you should day trade silver, but knowing that we have this room below and that we have larger time frame supply above, shorting a rally back up into any of these fresh supply or demand zones. Remember, keyword there, fresh. If you don't clearly understand how to uh, identify fresh levels, that's the most important part of this. Okay, so we have a couple fresh levels above, room below. We've got some opportunity in silver. Okay, let's go to the Dow Yen. I'm in a few positions at the moment, mainly in the equity index markets. So just full disclosure there. So what do we do with this yen? I know someone wanted the yen. So here's a couple levels that we had in FX Street off the weekly. These turned out to be fantastic levels here. And again, the point was, if you remember, we were going over this. We had significant fresh supply above at the time, and the most important part was we had really nothing to stop prices from falling below. Make sense? Okay, and that's the picture and the only picture you want to learn to identify, and then you should be good to go trading any market for the rest of your life. So what do we do with the yen now? Well, if we come down to one of these smaller intraday time frames, this is the spot yen we're looking at. We see we have some demand sitting just below. In fact, there's a couple levels down here, but not too far above. We have some supply, so we can be traders at any of these levels, but we want to pick the opportunities where you have a decent profit zone, right? There's that one. Okay, I'm just putting in these couple levels right here. Whoops. That's not where that line goes. All right. And then, of course, we have this one. Sitting just above there. So not a ton of room between these levels. Maybe offering a little more than maybe, I don't know, 2 to 1. Whoops, sorry about that. So this is a small time frame stuff, and that's really what we have. So I'm not interested in opportunities like this. Most of the time with these opportunities, yes, you'll be right in picking your direction, but it's not necessarily. I'm more interested in opportunities with huge profit zones. Okay. But if you're going to short time, trade the stuff in the really small time frames, you're looking to get in and out pretty quick. You have plenty of opportunity in this market to do that. Let me actually go down to this chart right here. So the 108 level, let's see if we can combine these two. Sure. So maybe 108 down to with a stop at 108. I'm sorry, 107.80 looks good for a move two. Let's just see here. Oh yeah, that doesn't look bad at all. All right, let's set this one up. Then you can see how we do this from start to finish. So I'm just taking a couple levels here and combining them. Okay, so you're talking about 25 pips of risk, but let's before we decide to do that, let's take a look at the reward first. There's that. And I know this level is only 20 pips wide, but I'm adding a little bit for the stop. Okay? I'm like just reading your little note there. So yeah, hang on. I'll address that question in just a second. So here's that supply level. I'm just showing it to you on a smaller time frame. Let's make this a blue line because that will be the target. So I'm just going to go a little bit before that. And right in there is perfect. So we want to get out before that level. And then, of course, our stop would be, just so everybody gets, full strategy here. Remember, the key to doing this is identifying what a fresh supply-demand zone is. In other words, I see your question below. Yeah, focusing on where the unfilled orders are, not where the candles show us where the filled orders are, but who cares about that? We care about unfilled orders. Where's that real demand and supply? Okay, so red line stop. Your entry point is the 108 even, and blue line is the target, which is at a price of 108.80. So risking about 25 pips for looks like about 80. 108.16. Let's see, 108.16. I don't really see anything at 108.16 to 29. Yeah, that would not be a fresh demand zone. Okay. All right, let's go to the next market. And I'll just go off your list again. If you run out of ideas, I've got plenty of markets I'm ready to look at here. So the last time we were together, here's that weekly again that we identified. Remember, we wanted to go into that level and short it again, and we're now falling. Anybody in this position? Anybody take this? We focused on this a lot last session. All right. If you're not in that or not in that anymore, what to do next? There's some great levels here. So what does the weekly tell us? We're at or near larger time frame supply, and there's room below to demand. So let's come down to a smaller time frame and map out an opportunity. If we look here at the hourly chart, there it is. So we have some supply starting at 1280. The good stuff is up around 1286, 1286.50. Maybe I'm sorry. Let's go with 1287. That's really where the meat of it starts. And price is stalling out here because we're hitting a little bit of demand. But again, let's set this up. If I love this market, but if you're new to this and haven't traded this gold futures market, COMEX Gold, be very careful. Don't just jump in and take the trade. Make sure you understand the numbers because this is a big money market. This is $100 a point. Very different from a lot of the spot markets you've been trading, numbers wise anyway. This one, the gains and the losses can add up very quickly in this market. It's a great market. I love it. I mean, I trade it often, but make sure you know what you're getting into. Okay, good. So you have a short position in GLD. Is that from that area on the weekly? The next area that we'd be concerned with below is this 1258. So we'd want our target. Let's put it a healthy couple points above that. Remember, when it comes to profit taking, we want very attainable profit targets. I'm totally fine giving up some profit and letting price go through my profit target for a good batting average and consistency. So let's go. I'm going to go to 1261. That should be about 1261. Okay. So supply zone entry point right here at 1286.50. Our stop would be 1292 and a target of 6150 to 62, somewhere in there. Does that make sense? Okay. And again, what's supporting that idea is, where we're at on the weekly. Okay, so it helps stack the odds, in our favor. All right, next market. CL. Absolutely. Let's go to CL. So again, here's the weekly that we've been, talking about for months and months and months here. Again, as we were saying, no real risk to this going too much higher at the moment. We have, we came up to this first supply, fell nicely. Now came up to the second supply zone, fell nicely. When we go down to some of the smaller time frames, I don't know where that line comes from. I can't move it. Let's go to, here's another one. There was that first level, worked out real nice, and we had a gap into it, nice novice gap into that one. Let's change this one now. That one's used up. Let's come down some time frames here. So again, knowing that we're coming off that weekly, okay, let's go. So that's what the 60 looks like. Again, the only information I get here is, boy, this area below, we've been down there a bunch of times. Let's go lower. Okay, same kind of picture there. Let me go down one more time frame here. Okay. So if you look at this chart, if you look below current price and to the left, we have all these pivot lows, right? Are those pivot lows the picture of, remember, don't forget, what's going to cause price to turn in any market is a supply-demand imbalance, right? Unfilled orders, not filled orders, right? Unfilled orders cause prices to turn. Filled orders cause prices to keep moving. Does everybody understand that? All right, so if you do, so all these pivot lows and all this, activity, price activity, trading activity below current price, and I'm talking about all this stuff down here that I'm pointing to, is that the picture of filled orders or unfilled orders? Filled orders or unfilled orders? Right. It's filled orders. Okay. The fact that price has been down here so much, that tells you orders down there are being filled, not unfilled. Okay. If so, we expect prices to keep falling, and knowing where we're at on that weekly chart, again, that supports the idea. So when you see that you have that just below current price, there's not much of a floor and there's room below, what should your first thought be? What are you thinking? Find a spot to get short, right? Right. So the only next question is, where's the fresh supply zone above? Okay. So now we have this area it's okay, not great, at 44.75. We have another little area at 45.20. We have a rally-based drop supply. There's your good one up there at 45. So there's some levels sitting just above that are interesting. Yeah. Okay. So, you know, those are good ones to plan out. We don't need to plan the whole thing out because we've been planning a lot of these out. Um, the other one, let me just get to. Again, we've already looked at the end, but I like this one a lot. Shorting a right. Look at what we have below and look what's sitting above. Look at the daily, look at the weekly, look at the whatever 4 hour. They're all telling you the same picture. Okay. We've been over that already, so let's go to. Sure, we can go to the Nasdaq or the S&P. Either one is fine. Here's the S&P. So let's go big picture. So I have a couple positions on in this market. So again, if you look at the larger time frame, this is very larger time frame. We're up into this area of supply. We've got all these pivot lows below. I'll just get rid of that circle. Okay. So again, filled orders below, unfilled orders above. We come down to something like the daily. Again, what do we have here? Kind of an ugly area of supply above. And do we see any fresh demand zones sitting below current price? Not really. See that? Let's go to a little bit smaller time frame. And look, the S&P and Nasdaq, they're a little tricky to find any larger time frame levels right at the moment, just because remember we've talked about trading markets that are in the middle of ranges. That's your highest risk time to trade. A lot of people say, "Oh, it's easy because it's in a range." No, it's actually the toughest time to trade, and your lowest probability time to trade because you don't have a lot of big pockets of unfilled orders. Best time is to trade is when you're out of those ranges. So for that, we would stick to much smaller time frame trading. So let's do that. Let's pull up this little 10-minute chart, 5-minute chart. We'll go smaller. So again, even here, it would take me literally, I don't know, maybe 3 seconds to look at this market and say I'd move on and find a market that has a better, some better opportunities. Like I said, I'm in positions here, but I'm in some options positions that are much longer term than what we're looking at here. Yeah, absolutely with inverse ETFs. I do that as well. All right, in the Nasdaq. So if you look at the daily Nasdaq, look at the daily S&P. See how different they are. This Nasdaq is extremely weak. Quite a bit of supply above. Really not a whole lot of demand below. Let's go to this chart to really see that. Yeah, again, if you look above, you have these, all these pockets of supply, and against these pivot lows sitting below. Does that make sense? Unfilled orders above, filled orders below. The likelihood is that this market will decline. Before we go too much farther, though, we want to go over to, let's take a look at the dollar. And I know we looked at this a week or two ago, right? But that's what the chart looks like. Now let's go to a little bit smaller time frame. That's the 4 hour. We actually don't need to go to a smaller time frame. Yeah, we're going to come into two, kind of key areas of supply above. So, would expect this to stall out, once it goes a little bit higher. All right. Let me scroll back here. New Zealand, sure. Let's look. Let's go to another market here. Okay. So let's go to this chart right here. All right. What do we see here? And maybe I want to make sure that you get this too. Is this market over the next, few days to weeks headed higher or lower based on what you see on this chart? Higher or lower based on what you see in this chart over the next, few days to weeks? Yeah, and why, right? So again, the question becomes, do you have where are there, what do you have below? Filled orders or unfilled orders? What do you have above? Filled orders or unfilled orders? Okay. Again, if you look, here's current price. Let's look just above. Two fresh levels of unfilled sell orders, fresh supply. Below, all we have are a bunch of pivot lows. Those are the pictures of filled orders. Okay? So again, this is a market we would be interested in shorting a rally into into that supply for a bigger move lower. Let's see, the 6-7. So inside here, drop base rally, yeah, you're probably going to have some demand in here. Okay. But it's demand, but it's not fresh demand. Okay? So we have that level. I'm trying to remember what the chart we looked at. Oh, the yen was the other one. Okay. So we can go to a smaller time frame if you want to look up here on the 5-minute. Right? If you want to look up here on the 5-minute, based on that information, we have, if you look up at the 68, 10 to 20 area, we have some nice supply there. And again, if I scrunch down any of these smaller time frames, you're going to see you don't have any fresh demand anywhere close below current price. Does that make sense? Okay. It's not that one time frame is like stronger than another. You can't be careful not to think of it like that. What remember, all these frames are all different pictures of one market, right? Of one supply and demand equation. So we look at different time frames to get different. It's really no different than how a doctor looks at an X-ray, right? They never take one picture of what you might think is a broken bone. It's always like three or four different angles. All the pictures look very different, but you're still looking at the same body part. That's exactly what this is. Yes, we can absolutely take a look at Apple. Let's look. All right. Apple's great. The only challenge, and there's no reason to stay here too long, is we really we've been looking to short rallies into fresh supply zones, but it's either hasn't rallied to enough of the zones or it's just such a weak stock. We really need more of a rally for it to get up there. The next spot we'd be interested in shorting this market at is going to be, at least at the moment, up above the gap fill. So new supply may form and develop, but it hasn't yet. Let's go back to our silver trade, our silver opportunity. Just don't forget, I noticed a few people came late to the session. We've got this kind of larger time frame area of supply up here and a decent amount of room down to this demand zone that we see on the daily right around 1630-ish. So again, with that, I know a lot of you are not longer-term traders, but use that information when you're short-term trading too. So now, because of that, because we have all this room below and the nice overhead supply, for example, if I go down to the 5-minute, this 1730 level, or 1720, call it 27, looks outstanding. Okay, the 1720 looks good. In fact, I would combine those two if you can, if the risk isn't too big. All right. Next market, or I can go to one of the ones on my list. Here's one. So we've been looking at this one for months in FX Street. So I'm curious who actually took this trade, and if what we go over you guys are actually using. So remember the Aussie dollar weekly? Yeah, so remember this one? We set this up way in advance, and then we came down to the daily and refined it a little bit. Anybody take this trade? Just want to see who's actually using this stuff and who's not. And I know a lot of you are new to the sessions today, but bigger risk on that weekly because of the size of the zone, but we're able to refine it down here. All right, let's move on. While you're typing here, let's move on to the pound. And I see BP. So Angela, you're looking to look at the futures or the spot? I can look at either, but I prefer the futures as well. All right. Yeah, the only challenge with the pound. So we do have a little bit of supply developing right above. We do have a little bit of demand below, but these levels are very close to each other. See that? We want to look for that same picture, just when the levels are much further apart from each other. So this one's likely to stay in a fairly tight range for the next, I don't know, day or so. But once one side of those orders are gone, then there's plenty of opportunity here. Right. Not enough risk reward, not enough profit zone, whatever you want to call it. Okay. So we looked at the yen. Oh, the only market we haven't looked at, or the main one we haven't looked at, that no one's asked about is the euro. Let's go check it out. Not this chart, though. Let's go down to a small time frame. We keep looking at the larger time frames. This big wick here kind of screwed things up for the yen, but of course it's no coincidence that it stopped right at supply, right? So, but the fact that price was able to get up to that 114.75 area tells us there can't be any significant supply until that price level or higher, meaning banks are aggressive sellers up there, but not below that. If there was a significant amount of supply below the 114.75, prices would never have traded 114.75. So given that information, we should probably be looking to buy the yen. I'm sorry, the euro. Let me go down one more time frame here. Okay. This area right here doesn't look bad. I'll circle it just because I know price could be here any second. Let's go with that. Okay. So possibly buying a pullback into this demand zone that I've just circled for a move higher. At a minimum, back up to this 114.20 area. But given that the real supply is at 114.24, we'd like to take kind of a short-term trading profit before that. Okay. Let's see. Bigger picture, yeah, I would say I would agree with you. I was just talking short term. Sure, we could look at the euro against the Aussie. Okay, let's start with the daily here. This one's kind of up into an interesting area. See how this one's kind of into all this? Well, I don't look at this and say, ooh, that's great supply. But what it does trigger, the thought that is triggered is, let's quickly go to a smaller time frame and investigate that. Let's take like an X-ray snapshot of that area. Maybe something great, maybe not. Okay, we're now down to a smaller time frame. Looks interesting. Let's switch this to a 4-hour. Not that there's anything magical about the 4-hour, but it's smaller than what we're looking at now. So this doesn't look great up here, but what does look really good is what's sitting just above. So let's set this one up. So we're looking at the euro against the Aussie. Okay. There's that level. Now, where would you say is the, and I don't know that there's anything great below, but where would you say is the demand below? Yeah, I'll go back to that yen in just a minute. Yeah, this level down here. Now, this is not necessarily a level we want to buy at, but as far as a profit target, we want to get out a little bit below that. So if that's at 149.20, yeah, I'd say get out quite a bit before that. Maybe even, 20 pips before that. Okay? But that level up there looks really good. All right, let me scroll back here. It's kind of an important question, I think. Let's look. You want to look at the 108.8 in the yen, 108.50, 108.80. Yeah, we could go back there. So this is the one where we, oh, so let's see, 108.80, 50 to 80. Oh, I see. I think you're talking about this one, right? Yeah, so you're talking about these two levels over here? Yeah, no, I like those. You're just yeah, just remember you're actually into just approaching a little bit of demand right now. Okay? So if you were an interested buyer, we would look, if you bought there and it turned higher, you'd probably want to consider getting out before that 80, maybe like 70, 75, 108.75. Just like if you shorted at the 80, you're probably going to get a bounce, right in here. Make sense? Okay. And here's where yeah, so specifically down in that we get onto the small time frames. Yeah, there's demand up here, but there's even a little bit better demand just below. So this is that one we kind of set up. Okay, and then when we looked at the yen futures, let me just go back there. Yeah, this looks lower. Back to the yen spot. It should look higher. And I think it does. Let's pull this one up. I just want to see what we're coming into here. Okay. Just double checking on this one because this has kind of some bigger picture opportunity. Wow, we've covered a lot of markets today. I don't think we've ever covered, it's been a while since we covered this many markets. So there's my email address. I just saw we're out of time here. Time flew by today. We looked at so many markets. Seiden at tradingacademy.com if you have any questions. If you're new to this, you can always go back and review some of the basic videos on strategy. But again, of course, it comes down to identifying those fresh levels. And this isn't just for trading. This is for any type of market speculating, even your longer term investing, retirement accounts to your shortest term trading. All right. Have a great day, everybody, and we'll see you next time.